I'm a real life trader, and I'm here reminding you to be good. And by good, I mean get out of debt, achieve your financial dreams, and give generously to your community. I've had lots of questions lately on how to enter a bearish trade. What do you need to do? How do you do it? What are all the different triggers, stops, targets, and all that kind of stuff? First of all, there are a couple of order types you need to know. And let me see if I can use this to kind of type them out. The first of all is a market order. So you can buy market or you can sell market. Now what that means is you just kind of put the order into your broker and it is up to them on how to execute it. Almost always on a buy market, once your order is submitted, they will buy the number of shares you indicate at the next ask price. If you put in a sell market, you will sell the number of shares you indicated at the next bid price. So the ask is almost always higher than the bid, but those would be the numbers that you buy or sell at. Now, when you're actually doing the trade, if you put in a buy market, most likely it will execute immediately. I mean, it'll look almost instantly. And the same thing with the sell market. Now, if you're going to short shares, you do it just the same way you do as you buy shares, except you sell the shares first. You don't need to do anything significant with your broker to say, hey, I'm going to go short with these. You just sell them, and the broker will short you the shares. Now, not every stock is shortable, and sometimes different brokers can short different stocks than other brokers. But as far as entering the order, it's the very same. You can do a sell market to enter a short trade. You can do a buy market to exit the short trade. Now, market orders are usually not considered very desirable because you have not so much control of where you get filled. There are traders that will watch a stock, they'll watch their chart, something like we're looking at CG here, and as they see it get down to 2308, which is where we've marked our trigger based on the retest of this double top, as they see it get to the point where they want to get in, then they'll just click over to their broker and say, hey, do a sell market, do it right now. But what most of us like to do is we say, hey, I would like to enter short on this stock if it gets to 2308 or lower. So there are some other order types that we need to talk about. One is called a sell stop. And this, once it gets to your price that you indicate, it will sell at the next market, I should say at the next ask price. If you do a buy stop, I should say once it gets down to your price. So a sell stop effectively will execute your order at the price you indicate or lower. A sell stop will effectively execute your order when it gets to the price you indicate or lower. What the broker will actually do is once the stock gets down to the price you indicate, then your broker will execute it as a market order. The risk is if you've got something that moves very, very fast, you have a market order hanging out there and it'll get executed at the next ask price, whatever that is. So there is possibility for slippage. That is a sell stop. The next one is a buy stop. And this one says once it gets up to the price indicated, how do you spell that? Price you set, the broker will execute your buy order at the next bid price. So in kind of real life, we use a buy stop to say, hey, if it gets up to a certain price, then buy it at that price or higher. Really what the broker is going to do is when it gets up to the price that you set, it will throw it in as a market order for the next bid price. So that sell stop and buy stop and all actual real life situations, if you want to sell shares at a certain price or lower, you do a sell stop. If you want to buy shares at a certain price or higher, you do a buy stop. Now, the opposite side is a buy limit or a sell limit. So sell limit says sell the shares at the price indicated, I have to spell that again, indicated, I think I spelled it right that time, or higher. A buy limit will buy shares at the price indicated or lower. I guess I can put the stops in. Sell stop will say sell shares at the price indicated or lower. Buy stop sell shares at the price indicated or higher. These are very confusing. These take a long time to understand, to internalize, and to get correct. I still make the mistakes of putting in a sell stop when I wanted a sell limit, and Jeremy Newsom tells me every now and then that he does the same thing. So hundreds of trades still botch these up. So one trick that we always, that I always do, and I know Jeremy does it as well, we read the trade aloud before we click the button to submit it. At any rate, so if I wanted to execute this trigger, basically what I'm saying is I want to sell lower. Well, to sell them or lower, that's a sell stop. So I can, let's see if I can do this to say trigger, sell, stop. And if I want to close out my position when it gets down to 2250 or close out part of it, I'm going to do a buy limit because I want to buy them when it gets to that price or lower. My stop order, and one thing that's confused, we have lots of different stops. This is actually short for protective stop, which means protect my order, but this would be a buy stop because I want to buy the shares back if it gets to this price or higher. So there's a variation called a sell stop limit to get you in on a bearish order, or on a bullish order you might try a buy stop limit. There's lots of videos on Real Life Trading that will explain that. There's other places. I wanted to keep this video short and sweet, but if you want to take extra precautions to protect your entry against slippage, check out sell stop limit and buy stop limit at reallifetrading.com, or other financial websites will help you out. Questions, thoughts, opposing views? Rob says, so is the sell stop the same as stop market order, which is what TD Ameritrade shows? I'm gonna say yes. I'm not for sure, Rob. The best thing to do would be for you to call your broker. That's why you have a broker, is so that you can call them. But yes, that would be my guess. If they say stop market, it is most likely a sell stop or a buy stop. Any other questions? Go ahead and type them in. I see a few people are typing, so I'm going to pause. Okay. So thank you guys for watching this short video. If you have any questions, feel free to send me an email, brad@reallifetrading.com. And as always, trade on logic, not on hope. Have a good one, everyone.